All right, I hope you guys are having as good a Wednesday as we are over here. Today, we're going to talk about a question I get all the time. So I hope you watch this one on does the Fed fund rate impact mortgage rates? All right, but first, a little housekeeping. Down below, you can sign up for the next homebuyer education class. That's going to be on Happy Thanksgiving, November 24th. So the Monday before Thanksgiving. Now, the good news is we're sponsoring the lunch. I'm doing a community lunch, something we're going to do every month now going forward. We've done it for the last two, and people are loving our partnership with the Colossal Cafe. Sandwiches are delicious. And my evidence of that is because we had 29 families. I got 40 sandwiches, and they were all gone very fast. So if you know anyone or who do you know that's renting that could benefit from reducing a little bit of fear of not understanding the home buying process, get their certificate. So if they're the first gen, get ready for that when it opens up in January. Down below is a link. Sign them up. It is a free class. It's typically $40. I also sponsor that. So it's free with a voucher below if you get them signed up. And then also a free lunch. So that's our giving back. We want to do that on every one of these classes going forward. Now, today, the big question, does the Fed rate impact mortgage rates? The last two Fed rates, it sounds great, but the answer is no. The Fed fund rate is the overnight money that banks lend to themselves. The government has a mandate to keep inflation at 2%. So they have different swords or weapons. One of them is the Fed fund rate. So they want to bring that down, hopefully to spawn a number of things, but fight inflation and enhance consumer consumption. Surprise, surprise, what time of year is it? Right around the corner here is the holidays. So the spending's already starting with all these early Black Friday sales that I see today. Yesterday, JCPenney's had theirs. So that's the Fed fund rate. Now, it doesn't. The federal government or the Federal Reserve Committee, there's 12 men, 10 vote. Jerome Powell's the chair. They do not control the 30-year mortgage or mortgages. They do not control that. It's the Fed fund rate. Okay. Now, the last two times that it went down, the mortgage bonds actually did not go up. They went down. But what does that mean? 30-year fixed correlates with the mortgage-backed securities. And when the mortgage-backed security goes up, then the rates go down. But if they drop, then the rates go up. And they did drop the last two times that the Fed did cut the rate. So that day it went in opposite directions. Now I'm not going to nerd out too much on where rates come and how rates go up or down, but I will say that it does move every single day. So yes, we had a bad day when the Fed cut the rate for mortgages that day. I think it was down 19 basis points, and then it went down 40 basis points the last cut. But we've bounced back, and rates are actually very, very good right now. The long-term forecast is that it will be going down. But if you're working with a bank or you have a friend that's working with a bank, and they have their eye on the wrong indicator, such as the Fed fund rate, then we do recommend you find a lender that does follow the right indicators, which in this case for mortgages is a mortgage-backed securities. So hopefully not too nerdy this week, but the main message is the Fed fund rate and the Federal Reserve does not control 30-year mortgages. Those are separate entities on how they're set up. So with that being said, always remember a good day in interest rates, a bad day in interest rates. Great deals for Black Friday, bad deals for Black Friday. Always remember, it truly is a wonderful life.